You know, for decades, the US dollar has been, well, the king, the undisputed ruler of the global economy. But something is happening right now, a really quiet but massive shift that could change everything. I'm talking about wealth, global power, even the cash in your wallet. And to really get what's going on, we have to start with this one single, really powerful warning.
So, the breaking down of the current monetary order. I mean, that sounds intense, right? But this isn't just some dramatic headline. It's a direct observation that the fundamental rules of money, they're changing right in front of us. This whole idea, the monetary order falling apart, that's really the heart of what we're digging into today. So, what does that actually mean?
All right, so to really get where we might be going, we've got to take a step back and look at where we came from. We have to understand what money used to be and compare that to what it is today. Okay, check this out. This is where it gets really interesting. On the left, you see a gold certificate from 1928. Think of this as a claim check. You could literally walk into a bank and trade this piece of paper for real physical gold. That's what people called hard money. Now look at the bill on the right, the cash we use today. It says Federal Reserve Note. What's that? Well, it's basically an IOU from the government. It's not backed by gold or silver or any physical thing. It's backed by a promise, by the full faith and credit of the US government. And that shift, it was absolutely monumental. So the big question is, how did this government IOU become the absolute center of the entire global financial system? Well, it all goes back to one single pivotal moment. So the year was 1971, and that's when the US officially cut the dollar's link to gold. Just snipped it. This was a massive shock to the entire world, but it created a brand new system. All of a sudden, the dollar was at the center of everything, but it wasn't backed by anything physical anymore. It basically became the world's main reserve currency almost by default. And you might be asking, what exactly is a world reserve currency? Well, it's pretty simple. It's the money that almost every country agrees to use for big international deals. Think about buying oil or other major resources. You're probably going to use dollars. And let me tell you, holding that status, it gives the country that prints the money, in this case the US, an incredible amount of economic power. And this is what created something called the petrodollar system. Now, this is the engine that has powered the dollar's dominance for 50 years. It's kind of like a perfect loop. Step 1. Other countries need US dollars to buy oil. Step 2. To get those dollars, they sell us their stuff. You know, cars, TVs, everything. And then, here's the kicker, step 3. What do they do with all those dollars they just earned? They recycle them by buying US assets, mostly treasury bonds. This whole cycle creates this constant, massive demand for the dollar. And, get this, it allowed the US to basically buy more stuff than it made, year after year.
I mean, that system worked like a charm for about 50 years. But now, well, now the foundation of that whole system is starting to show some really serious cracks. And countries all over the world, they're starting to make moves that are directly challenging this whole setup.
And the signs are pretty much everywhere you look. On the outside, you've got central banks around the world buying gold at a record pace. They're hedging their bets. They're not just stocking up on US debt anymore. Meanwhile, China has built its own payment system, basically a way to sidestep US banks entirely. And that's just the external stuff. Internally, here in the US, we've got a mountain of national debt that's just staggering. And our industrial base isn't what it used to be. So the old system, it's being squeezed from all sides.
But okay, here's the real plot twist in all of this. What if the biggest threat to the dollar's dominance isn't actually coming from China or Russia, but from inside the United States? What if, and this sounds crazy, what if weakening the dollar is actually part of the plan? I know, that sounds completely counterintuitive, doesn't it? A weaker dollar being good for America? Well, the answer really depends on which version of the American economy you think is worth fighting for. So, there are basically two competing visions for the US economy, and they are in direct conflict. In this corner, you've got what we can call financialized America. This America loves a strong dollar. Why? Because it means cheap imports for all of us consumers, and the financial sector makes a killing by exporting dollars and US bonds. But in the other corner, you have productive America. This vision needs a weaker dollar. A weaker dollar makes American exports, things like manufactured goods and energy, cheaper for the rest of the world to buy. It's a fundamental tug of war over what the future of the economy should even look like. And this brings us to a really fundamental problem. If the dollar's value is being pulled in two different directions by these competing goals, how do we even measure what anything is worth anymore? You know, if your measuring stick is constantly changing length, how can you measure anything accurately? Well, a lot of countries are looking at this problem, and they're turning to a very, very old solution: gold.
And that really is the key question for every single one of us trying to figure this all out. If the dollar, our main measuring stick for value, is actually shrinking over time, then our whole idea of what it means to be wealthy gets totally distorted.
Just look at this comparison. It is absolutely staggering. Back in the 1960s, if you worked for 1 week at minimum wage, you could buy about 1.6 ounces of gold, okay? 1 week of work. Today, to buy that same 1.6 ounces of gold, you would have to work for, wait for it, 22 weeks. Think about that. When you measure your labor against a real hard asset like gold, its purchasing power has just collapsed. In simple terms, the dollar has been debased. It just doesn't buy what it used to.
And here's the real kicker. Even the stock market, with its incredible run-up over the last couple of decades, looks totally different when you use this new ruler. Yeah, your 401k might look bigger in US dollars, but if you measure the value of global stocks in gold, they've actually lost value since the year 2000. What that tells us is that a lot of the growth we think we've seen might just be an illusion created by a currency that's losing its value.
Okay, so this isn't just some big, abstract debate for economists. This shift has very real, very direct consequences for your savings, for your investments, for your entire financial future. So what happens from here? It really looks like there are two main paths we could go down. Path number one is inflation. The dollar gets weaker, which means a lot of those dollars that used to be overseas come flooding back into the US, all chasing the same amount of stuff. In that world, asset prices like stocks and real estate could go through the roof in dollar terms, but your actual purchasing power, what you can buy, might actually go down. Then there's path number two, deflation. This is where there's a loss of confidence, money flees the US, and interest rates have to be jacked up to stop it. That could cause those same asset prices to come crashing down. Either way you slice it, it's going to be a volatile ride.
But here's the bottom line. Whether the road ahead is inflationary or deflationary, the core takeaway seems to be the same. This whole massive monetary shift, it really seems to favor people who own assets. Real things like stocks, real estate, commodities, way more than people who just rely on an income, a paycheck that's paid in a currency that's losing value over time. So I guess the final question we're all left with is this. In a world where our financial measuring stick keeps on shrinking, what are you going to use to measure your wealth?